So before we begin tonight, I must disclose that the slides that you're about to see tonight are general in nature. So we do recommend you seek professional specialist advice before implementing any changes that you're going to do. CareSuper is really here to help you through this important change, not only by running these events, but also communicating to our employers around Australia. So here are some examples of how we're here to help. So the first one, CareSuper actually has developed a webpage to provide you with valuable information about Single Touch Payroll. If you'd like some further information from tonight, please go to caresuper.com.au/Single Touch Payroll. We've also partnered with the Victorian Chamber of Commerce and Industry and have emailed out approximately 24,000 employers about this new change coming in on the 1st of July. And by now, you should have received your March newsletter, Employer News by CareSuper, telling you what you need to do. So I'd like to introduce Angela. So Angela is an Assistant Director in Single Touch Payroll Design and Implementation, with over 10 years working in the tax profession as an employment tax specialist, and more recently having worked as a legislative manager for a multinational outsourced payroll company. Angela brings her experience and insight to the project team, having worked firsthand with tax practitioners, payroll practitioners, and employers of all sizes. Angela is a chartered accountant and has a passion for educating people on tax and compliance. Please welcome Angela.
Thank you, Clark. Thank you for inviting me, CareSuper, and it's lovely to be here to speak to you all tonight. That was a really spectacular introduction, so thank you. The journey, STP journey, it's close to 4 years, believe it or not, to get to this point today. It's been a long journey, so behind lots of doors, this has been a project that's been going on for a while. We're hoping that tonight we can explain what it is, why we're doing it, and give you as much information as possible. And as Clark said, I will be around, so I'm happy to take questions outside of the actual presentation as well. So why? Why are we doing it? Not because of Big Brother. And I have to say that because I know that most employers, the first thing that I hear is this Big Brother is watching? And I can confidently tell you, no, it is not all about Big Brother. The very first picture on my slide there is our little super fun piggy bank. It's all about employee entitlements. This has been driven by government policy because there's been identified a $2.85 billion gap in superannuation entitlements. So employees not getting entitlements to super that they deserve. We're not saying it's always because the employers are recalcitrant. We're saying sometimes employers don't understand superannuation legislation. Sometimes they go through financial difficulties. There's a number of reasons why it happens, but it's really important that we do not allow employees to go without their retirement savings. So that's the first and very important reason why we are doing this. And you'll see as I go into a bit more detail as to how STP works, that the way you are used to reporting super will change because of the fact that we need to administer this policy initiative. Streamlining, I get rolls of eyes. I get a lot of that. Initially, I can see that a lot of people think, is it really? Is it really streamlining? And potentially you'll think by the end of this session that it's not all that streamlined. I'm hoping that you will once I'm finished, but also bearing in mind that we've had industry stakeholders on this project the whole time. So what did I say? Nearly 4 years now. Industry stakeholders across practitioners, payroll providers, developers, employers, super funds have been very heavily involved. So we believe we've gotten a lot of information from those stakeholders to try and design Single Touch Payroll, or STP as I might refer to it, in the most flexible way possible. But also bearing in mind that this is called phase 1 of Single Touch Payroll. The future state, or the dream state, if you will, of Single Touch Payroll is that eventually other government agencies, both federal, state and territory governments, will eventually leverage Single Touch Payroll also. So you as an employer may one day get to the point where all your federal government agency obligations as employers including your payroll tax to the state revenue officers, may be one day streamlined through Single Touch Payroll. That is the end state, that is the dream. I'm not saying we're there yet, but you will see that this is just a platform we're building on to hopefully move to that end state. Real-time information. So this one's really important. It's important for us. It helps us to monitor compliance, but it's also important for a number of other reasons. Real-time information means that we can talk to employers before they hit financial difficulty. We did a lot of reporting and stats that said the first indication that an employer is suffering from cash flow issues is when they stop paying withholding and when they stop paying their superannuation. They're the first indicators that they are in liquidity problems. So generally, by the time the ATO has any oversight or any indication that that is the case, it's far too late. So we would love to be able to be there to see these transactions as they occur and help those employers along and offer assistance where possible. Sometimes they don't even know that they can enter into payment arrangements with us or that there are other options to assist them. And employees. So we will touch on employees a little bit today, but we're hoping to help them too. If they've put through the wrong TFN deck details, we're going to know by what's being reported. We can contact them and give them a tap on the shoulder and say, did you perhaps forget to put a HEX debt in? Did you perhaps forget that you've got a second job and you're claiming the tax-free threshold twice? You're going to get a nasty surprise at tax time. And it's a way of us working with them and collaborating with them. This is not all about Big Brother. This is not about Big Stick. This is not purely compliance. It is also moving to compliance, but not compliance as in an audit or high pressure scenario. Leveling the playing field, it sounds very cliche, but the more and more I'm out there talking to employers at the moment, the more I realise it is a pain point. So if you as an employer are doing everything right, you have the right partners, whether it's, your super fund, your accountant, you do everything you can to be as compliant as possible, but you know that your competitor down the road doesn't do that, we've realised that that is actually a pain point for a lot of employers. I'm trying to do the right thing. I might not get it right 100% of the time, but I'm doing everything humanly possible to get it right. And so it's important. We need to level the playing field. If everyone's reporting through STP, no one is being treated unfairly. Everyone has the same obligation. Okay, this is a really high-level slide, so I do apologise if all of you have gotten a bit past this point. I might actually ask, how many of you already have a fair indication of what STP is? Okay, almost 50-50, I'd say. Okay, that's good. So at present, the law says that if you're a substantial employer, which is defined as an employer with 20 or more employees, you must start reporting using STP from 1 July this year. That law was passed in 2016, September 2016. And at present, it's before Parliament now to also introduce the law for employers with 19 or less employees from 1 July 2019. That law has not passed, and I couldn't tell you when it will pass, but that is also in the process at the moment. So, when do you start reporting? So, as I said, the mandate start date is 1 July 2018. To determine whether you need to start reporting on that date, we recommend that you do what's called a head count. Obviously, if you know you clearly have more than 20 employees, then a head count may not be necessary. We understand that. If you say, I've got 130 full-time employees, I don't think I need to quite count whether I've got 20, that's fine. But for those of you that are unsure, you would do a head count. In a later slide, I actually explain to you how you should do that head count, the types of employees you should include and those that you shouldn't. We do say it's common law employees only. So you'll see in one of my slides later on that you do not count directors and religious practitioners and certain types of workers, but we'll go into that in a bit more detail. How often? So the answer is every paid day. So if you pay your employees weekly, fortnightly, monthly, whatever the case may be, you will send what's called an STP pay event report every payroll. It's due on or before the paid date of that payroll. So if you run a payroll on the 13th, because your monthly payroll needs to be paid by the 15th, your report is due on or before the 15th of the month. Very badly worded last sentence there. What will I not have to report? If you report through STP and you finalise your employees through STP, you do not have to issue payment summaries or lodge a PSAR to the tax office. What's changing? I don't know if any of you have heard any other webinars that the ATO has conducted or seen any other content we've written for the website, but we do talk about natural business process. And in the consultation process, a lot of the focus was around that natural business process. Let's not completely reinvent the way most people are running their payroll. So what you'll see is the big box in the centre is us saying, well, in theory, this is your natural business process. This is what's not changing. This is stuff that you would already do. You would run your payroll through your software, and we've got BMS there because the terminology is business management system, okay? You would still do that. That's not changing. You would still issue pay slips to your employees because that's a fair work obligation that is not extinguished through STP, okay? And you would still send your ABA or your EFT file to the bank to pay your employees, or you might have a riot on your hands. That is not changing. What is also not changing is the little super fund piggy bank is in that box. Super stream obligations are not going away. That is not changing. You still pay super in line with what you do now, and you still use SuperStream to extinguish that obligation. So in that box, that's the what's not changing. This is what we think is your natural business process now. What is changing or what's new? So our little box in the bottom right-hand corner is what I referred to before as the pay event. That is the file that your software should generate for you every time you run a payroll. You should have the ability to review it and authorize it for sending to the ATO. That file will include year-to-date totals for every employee in the payroll, and that will be gross payments, total tax withheld, and now also superannuation liability or ordinary times earnings for each of those employees as well. So going back to our policy intent, this is going to be the first time the tax office can see what your employer is supposed to be accruing for you. There are other things in that file also. It almost looks identical to a payment summary as far as some of the fields that are in that pay event. It does include lump sums, ETPs, and other things as well, okay? But in theory, we're hoping your software will make that as seamless as possible, that it's just another report to review and send when you finish running your payroll. The other new aspect is under our little piggy, there's another box. So you're probably used to the terminology member contribution statement. We receive that once a year at the moment. So that's changing. So instead of the ATO only knowing once a year whether you've actually made payment on behalf of those employees into their super fund, we're working in design now, and I think we've just about finalised the design now, that funds will be reporting monthly to the tax office payments that have been made by employers. So through the pay event, we will see the accrual or the liability of superannuation or the ordinary times earnings, as the case may be. And then we will see the payment coming through via the super fund, and it will give us some level of assurance. I'm not saying we're going to reconcile the two, because in some situations that would be quite impossible, but we're going to ensure that it gives us a degree of assurance that the employer is meeting their obligations. Okay, so we talked about the employee, and you'll see why I said the employee plays a part here. What happens? So in that pay event, I've sort of given you an indication of the kind of fields that were included in the pay event. But what happens is the ATO has committed to transparency for the whole of STP. So the first thing that will happen is we will reflect that information back to the relevant employee. So those year-to-date amounts that you're reporting in that pay event file, they will see that information reflected back to them via their MyGov account. They can log in and they can go into their STP tab and see what their current year-to-date balance is at any given time. We do have a disclaimer on there, and we say to them it might not be 100% real time, because obviously by the time we process the file from you and then make that data available, we don't profess to it being absolutely real time, but it'll be really close to. Okay, and they can have a look at that, and they can use that to help them manage their own tax affairs. If they want to print it off and take it to the bank because they're applying for a loan, it gives them a year-to-date balance that they can use. Okay. When the employer finalises their employee for a financial year, so let's just say I'm a fortnightly payroll. When we receive pay event number 26, we're not going to assume you're finished. We're not going to assume that that's it, that employee has nothing else. And also, we need to allow the employers the same process they have now, which is they might want to go to their BAS or tax agent to get their numbers reviewed, do a reconciliation. So we have what's called the finalisation process. Finalisation is literally a flag in the file that you can mark an employee as F for final. It's you making a declaration to the commissioner to say, I'm done. This employee is completed for the financial year. And when you do that, that is the indication to the tax office to send the data to the employee's pre-fill for their income tax return. Okay, so those two top ones are exactly what we're doing for the employees. If your employees do not have MyGov accounts, refuse to get a MyGov account, or are not eligible for a MyGov account, they can come directly to the tax office for a copy of that information. And because we are not allowed to call it payment summary, because that name is taken, it's called the employment income statement. Okay, that's what it's going to be called. For our small and medium withholders, they will have a pre-fill of their W1 and W2 labels on their BAS pre-filled. So their gross and their tax withheld. And that's because in every pay event file, at an employer level, we have period data. So we have period data for the employer level, and we have year-to-date data for the employee level. So we will pre-fill the W1 and W2 labels on the BASs for our small and medium withholders. You do not have to accept what's in those labels in that pre-fill. If you think that there's something wrong with that number, you can override it, or your accountant can override it, whatever the case may be. We will also be reflecting the STP information to the practitioners through their portals, the tax and BAS portals, and also back to the business themselves through the business portal. And then, as I said at the very beginning in my introduction, we're hoping that this is the platform to start sharing with other government agencies moving forward. We obviously already have data matching capability now. We have law that supports that now. But if we move forward and we start having more and more government agencies coming on board, that will move into that space also. So here we go, screenshots. Now, these are all prototypes, so they may not be the exact final view that everyone will have when we go live. They're pretty close to finish, I'd say. So the top view is both the employer and the tax agent or practitioner view. So it basically, I like calling it a lodgement history, and that's what it looks like. It looks like a lodgement history. It has the date you submitted the pay event and what submission ID is attached to that, and then what was the total gross and the total withholding within that pay event file. So you'll have that there as basically a lodgement history to prove that we've got all your submissions. If the BAS or tax agent is actually acting on behalf of the individual, so the employee, because they do their tax affairs, they might see the full view for the employee. But if they're acting on behalf of the employer, that's all they're going to see. They are not going to have access to employee level data, and that's because of security purposes, being private and confidential information. If the employer chooses to share that information with their accountant, then that's different. But we will not be displaying employee level data to the accountants. The bottom screenshot, and I do apologise because I know it's a bit squashed and not very clear, that's what we're saying might be the view for an employee. So the two tabs, I don't know if you can see the two tabs, current and history. First and foremost, the history tab will only come into effect once you have STP data in your history. We will not be uploading the employees' payment summaries from prior years. Okay, so just wanted to make that point really clear. Current. So you'll see there's actually 2 entries there for the same financial year. That could be for a number of reasons. It could be that I have multiple employers. It could mean that I have the same employer with 2 ABNs. It could mean I have the same employer but uses 2 different payroll software to pay me. Okay, there's multiple reasons why they might have more than 1 entry in their file. And then the other thing you'll notice is there's a green shape that says year to date. So what that is telling the employee is this data is still in year to date. It hasn't been finalised, but once the employer does finalise it, it changes colour, and I can't remember what the colour is. Could be the important stuff. And it says tax ready. So as soon as you finalise that employee, it says tax ready, and that employee knows you've finalised it and they can go right on ahead and do their tax return. And it will be waiting for them in their pre-fill. Okay, so we talked about us collaboratively working with employers. So I didn't mean just lip service to it. It's really important. As part of the flexibility of our design, we've had to look at how you would correct information you've already reported. Payroll's not static, payroll moves. By the time you've lodged a pay event, you've probably changed half the payroll already. And we understand that. So these are the general rules for reporting a correction or a fix. And it's not always a correction. Sometimes it's data that's come to light after you've already run the payroll. It could be something that you've missed. It could be a correction. It could be that something was just entered wrong. But the rules are this. You have 14 days from the day of detecting the error or omission to make the change through to the ATO through a pay event. The Commissioner has already exercised discretion, so you don't have to apply for it, that if you have a ongoing or continuity of employment for that employee that you need to correct, that you can roll it into your next regular pay event. So if I'm a monthly, fortnight employee, but you realise a week after you've paid me that there's an error, you can still hold that error over and report it to the tax office in the next pay event for the month. You don't have to. You can, if you want to. You can send another pay event at that point in time, or you can roll that error over and report it in the next regular pay event. Same for out of cycles. You could do that as a separate pay event, or you can roll it over and put it in your next regular pay event. So that's a bit of flexibility. And then we've also introduced what's called an update event. So I've been talking about pay event, and now I'm introducing a new concept, update event. Update event is the same as a pay event, except that it's not tied to financials. So it means you can use it even if there's nothing as far as payment. So what would you use an update for? You might use an update to report a reportable fringe benefit. You might use an update to report the risk, or any of that information that doesn't involve paying the employee. On the subject of risk and RFBA, we do not expect that risk and RFBA will come through your pay event, every pay event per pay. We understand that a lot of that is managed outside of payroll, and that update event might come to us at the end of the financial year. We completely understand that. Just before you finalise your employee, you put through your RFBA and your risk. So we completely understand that. Not everyone manages these types of obligations through their payroll. So because of this flexibility that we've built into the STP pay event, and we're saying, okay, just roll it over to your next regular, there's a warning there to say, be mindful of your activity statements. And this is why I said you might want to change the pre-fill amount. If you've rolled over some of the corrections and you're saying, I'm holding those over until I do my next regular pay event, if those amounts are material, then you might still need to adjust your BASs to ensure that they're reflected in the right period. Even though for STP purposes, we don't mind if we get it later. Does that make sense? And large withholders, well, they don't report through the BAS anyway, so I keep talking about finalising. So here it is. The actual exemption to issue payment summaries and lodge a PISA or MDUP file to the ATO is only extinguished when you finalise the employee. Okay? So you could be reporting for them for 6 months of the year, but if you never finalise them, then you haven't extinguished that obligation. So it's really important. You will go into the file, the pay event file, or the update file, as the case may be. It's up to you how you finalise for the end of the financial year, and you will flag those employees as final. We, as the tax office, have said we're happy for it to be finalised on a per employee basis. So that could be you go in after pay 26 and you say, you know what, 50% of these guys, I've got nothing else. So we're going to finalise 50% of the employees now. And the rest of them that might have RFBA or RESC or a few other bits and pieces we need to check, we'll hold that over and finalise them later. And that's fine. The important note here is the finalisation must be done by the 14th of July. So it's the same date as you currently have for issuing your payment summaries. However, again, the Commissioner, understanding that this is a really big change for everyone, has given some concessions to the due date for the first 3 years. So for the first 3 years, the finalisation must be done by the 14th of August for year 1, for year 2 by the 31st of July, and then we move back to 14th of July in year 3. So 2020, I think it works out to be. Okay. As I mentioned earlier, once you do finalise, we do move the employee's data from year to date to tax ready, and it goes into their pre-fill reports for their tax return. If you realise that you've made a mistake, it's no different to the amended payment summary process you've got now. You will lodge another pay event or update event with a final again, and it will override what you previously lodged as a final, and that's what we deem as an amendment. Okay, so our approach, our focus right now is helping people to get ready. And quite frankly, right now, that's the products. That is the payroll providers and the DSPs that are creating STP-enabled products. Because without it, no one can report through STP. We are doing a lot of work with practitioners, stakeholder groups, super fund stakeholder groups to ensure that they can support their employers into STP. For year 1 and 2, we will be doing mostly just data integrity checks and health checks to have a look and see that that pay event data that's coming in actually makes sense. There are no really outstanding anomalies that we're seeing and think, well, something is completely awry with this person's payroll. We're not performing full compliance action on the first year's worth of STP data when we know it's going to take a long time before it's as accurate, as efficient as possible. I will skip the last 2 boxes because I think the next slide covers it better than this. So this is our approach. Our Assistant Commissioner, John Shepherd, if any of you have ever heard him speak, he loves this slide. He calls it the customs slide. So we're taking a customs approach, green lane, amber lane, red lane, nothing to declare, move on please. So if you are green or amber, it means that your history of compliance is pretty clean, maybe a couple of hiccups. We know you're trying to do the right thing. All we will do is just reach out to you. If we think something doesn't look right, we might just reach out to you and have a chat. We'll do that high-level health check. We'll speak to you. We'll work out if there's any issues with your data or if your system is not quite pulling things correctly, and we want to help you get it right. The only time it becomes a compliance action and it becomes serious is if you're in the red lane. And to be in the red lane, that means you have to be a seriously, and I call it delinquent, employer. That you are always non-compliant. And what do I mean by soft touch and what do I mean by help? This is an example of what we're thinking will be the way we go forward for our green and ambers. So if you start reporting through STP and we get the gist that you do your payroll fortnightly, because we're used to seeing them roughly every 2 weeks, It might be that a month goes by and we don't see a report from you. And it might be that we send you a text message to say, hey, we think you might have missed one. Did you just want to check? And that's it. It's as simple as that and as low touch as that. It's helping you become compliant. It's helping you understand STP to get into the rhythm of STP. It's not about, we're coming after you, what the hell have you done wrong? Really important. So I keep talking about 1 July 18. If you have 20 more employees, you're reporting from 1 July 18. Okay, but we do have in place what's called the deferrals and exemptions. There are 3 main types of deferrals and exemptions for STP reporting. The digital service provider or DSP deferral, that actually means anyone who's a payroll provider or software provider. An employer deferral, or a payroll service provider or agent deferral. And I'm going to go through each of these in turn. What's really important is this. I said to you earlier, we're working with the DSPs to make sure there are products, to make sure that their clients can report. So the most important deferral right now is the DSP. So if they're saying my product won't be ready, or my product will be ready, but it's so close to the 1 July deadline that my employers are not going to physically be able to implement it, roll it out, test it in time, they can apply to us for a deferral. Okay? They can apply, they have their own evidence deferral kit, they can apply and we can grant it based on their circumstances. If that is the case, if they are successful in obtaining a deferral, their deferral covers all their employer clients. What will happen is we will notify them that they're successful and we will give them what's called a deferral reference number. So we will say, yes, your application was successful. You now have until December 2018 to start reporting. Here's your deferral reference number. Please issue it to your clients because now they are also covered by that deferral and will not have to start reporting until December 2018. So it's really important if your product has already had the deferral given to them, that they give you that number. Okay. The second is the employer. So regardless of whether your product's ready or not, whether your product has a deferral or not, if you look at the date that you're supposed to start reporting and you have extenuating circumstances and you say, as an employer, there is no way we are going to be able to start reporting from that date, you as an employer can apply for a deferral from the tax office. Okay. And even if your DSP had one as well, so let's say, again, using my other example, the DSP has got one till December and you say, well, I'm not going to be ready till April. It could be the fact that you're just applying for a top up over and above the product one. Okay. The payroll service providers, I've got to be really clear here. We're talking about actual service providers of payroll, not just payroll software. We're talking about payroll bureaus or fully outsourced payroll who are actually registered as agents or agents, BAS and tax agents. They can apply for a deferral in one of 2 ways. They can apply for a deferral on behalf of the employer. They can also, if you've asked them as your agent to do so, they can do it through the portal. They can apply for your deferral for you. But what they can also do, and this I can see working more so in the BAS agent space, where you've got bookkeepers who have a number of employers that they run payroll for and do the payroll reporting for, they can apply for one for their client base, just as the DSPs can. They can say, well, I'm updating all my MyOb software and I'm doing this and I'm doing that so I can enable myself to service all my payroll clients. I need a deferral. Then they should be able to get one to cover their client base also. I've put on the slide there, in tax language, a deferral means it's less than 12 months. The minute you are applying for something longer than 12 months, that's an exemption. You're exempting yourself from a full year of reporting. So very different. The requirements would be slightly different. I would say the proof required to have a full 12-month exemption would be different to just a deferral of starting your reporting. Exemptions. So I'm sure not everyone in here is a tax nerd like me, but when the law was passed, it actually said there are 2 specific exemptions that the Commissioner will consider straight off the bat, and that is the seasonal employers and internet accessibility exemptions. Okay. Seasonal employers exemption is a class exemption. What that means is the Commissioner has come up with criteria of what it takes to qualify for that exemption. So if I do my headcount on 1 April and I work out that I've got more than 20 employees, and I say, but I've only got more than 20 employees because I happen to be working at the Easter show and I've employed an extra 10 people purely because it's a seasonality thing. Any other time of year, I do not have more than 20. It's only purely because that headcount day falls in the worst possible time of the year. Okay? So this is an example. I'm not saying it will definitely work, but if they look at the criteria says something along the lines of this. You would be a substantial employer because you had 20 or more on 1 April. However, that's not indicative of your true ordinary workforce. So then the test is this. If for the immediately preceding 10 out of 12 months, you didn't have 20, or for the next 10 out of 12 months, you're not going to have more than 20, then you can potentially apply that exemption. That class exemption is a self-assessed exemption. That means you as the employer determine whether you meet the criteria or not. If you do meet the criteria, you do not have to send anything into the ATO to say, by the way, I've done the test and I qualify. You don't have to do that. You keep the record for yourself and you keep it on file just in case. It's a self-assessed class exemption. Internet accessibility is not a class exemption, but we have some guidelines around it. It's a twofold exemption, so it's on a case-by-case basis. You would have to apply for it, but it's twofold. So it looks at the cases of people who have no internet connection versus intermittent internet connection. And it has a few sort of guidelines around where we might support you if that's the case. And it's slightly different depending on which category you fall into. That hasn't been endorsed yet. That hasn't been finalised. So I'm not going to tell you what that criteria is yet, but there are two types. What's really important is if you're exempted from reporting for a year, your obligations, your existing obligations must be met. So you must issue payment summaries, you must lodge a PSAR or MDUP to the ATO and do everything as you would do now. So it's really important. Just because you get an exemption from STP reporting, it doesn't mean there are no obligations whatsoever. Whereas with deferrals, it's quite different because with a deferral, even if you started in December 2018, because your employees are year to date, we'll have a year to date figure at that point when you start. We'll know that this figure is actually 1 July through to December, even though your first file came through in December. So it's really important to differentiate between a deferral and an exemption. March. So this month, we've been slowly getting all our letters out. I think there's something in the vicinity of 30,000 odd letters to employers that we think are roughly around the 15 to 20 employee mark to say, have you started thinking about your headcount? And have you spoken to your providers? It's just a nice, have you thought about getting ready letter. Employee headcount, as I said, is determined on 1 April. Now, for those of you who were much quicker than anyone at the ATO, you might have already worked out that the 1st of April this year is actually Easter Sunday. Okay? Took us ages to realise we'd done that. Oh, really? Easter? Okay. No, please don't leave your chocolate and go into the office and start counting people. That's not what we're saying. Okay? We're saying you can perform that headcount at any time, really, but it has to be as at the 1st of April. And you'd want to do it as close to the 1st of April as possible because if you determine you are a substantial employer, I'm assuming you'll want to know that sooner rather than later and that you'll want to prepare yourself if you are going to have to start reporting from 1 July. So just wanted to make that clear. Employment commencement. Now, I haven't talked much about it. As part of STP, we've also designed a lot of digital online onboarding solutions as well. So that includes employee commencement forms such as TFN decks, super choice forms, and there's something else which my brain's gone. Sorry, everyone. Those are almost finished in design. The reason why we don't talk about them now is because they're not mandatory. So the mandatory STP reporting is that pay event and reporting per pay. These are nice to have. So if as an employer you would like to use these services, then you can. So a lot of those services will start becoming available from June this year. Okay, so just watch this space. It's not mandatory. If you want to use it, watch this space, listen out for all these developments, and you can start using it as they become available. So 1 July, of course, if you are a substantial employer on the 1st of April, you will start reporting on 1 July, unless you have a deferral in place. If our legislation passes through Parliament, the small businesses, so 19 or less employees, will start reporting from 1 July 2019. And we will start our BAS pre-fills of W1 and W2 from 1 July 2019 also. So we want to make sure that that first year goes through, that the data's not a complete mess, and then we'll start pre-filling the BASs. This is my last slide, I promise. Checklist. It's very high level. Obviously, there's some really obvious things there, like please speak to your payroll solution provider. If you haven't already done so and you don't know what their plans are and when they're going to make their SDP-enabled product available to you, then please have that conversation sooner rather than later. If they're going to be ready, or even if they're not going to be ready, the conversation still needs to be had. It will be a different one. If they're not going to be ready, have they applied for a deferral? And if so, have they got a deferral reference number for you? If they are going to be ready, are you going to be ready? Or do you need to apply for a deferral? Or is there something else you need to do? Is it uploading something totally new into your system? What do you need to do to get ready? Talk to your tax professional. So for those of you that do have a tax or BAS agent, they might be able to help you as much as they can to transition you in. And then the other things we've got there are pretty high level, but one of the ones I really want to touch on is the authorization piece. So people who are used to lodging tax returns, this is not new. Authorizing is to say this information is true and correct, and I'm authorized to lodge this on behalf of the employer. It's always existed, and in payroll land, we've never really had to deal with it, but we will now because you're lodging directly to the ATO. So as you submit that pay event report, there is a authorization that goes with it that says the information in this file is true and correct, and I am authorized to send this file. So what does that mean? So a lot of you know that on the payment summaries, in the past, we've always said the public officer should be the one to sign the payment summary. Does it make sense that the public officer is the one reviewing an SDP pay event file? It might not. It might not, because that person has to say this information is true and correct. And it might be that that public officer actually does not know everything that's gone into that payroll and cannot confidently say that that information is true and correct. So it may not be the public officer is the appropriate person to make that declaration. That public officer might have to delegate their authorization to someone in the organisation who can. Really important. So slight change to what you're used to, but I think it's important. We want it to be someone who actually has some idea of how that payroll has been generated. Last and not least, we do have a landing page also. We've just uploaded an employer obligation content piece. So we've updated that as much as we can for a lot of the detail that I've explained to you all here today. And we are on social media, believe it or not. We are trying to be digital ourselves and not just enforcing it on other people. So you can follow us on any one of those mediums. And that's it.